Welcome to Bears in Exile. Today is May 19th. This is the market overview video. We'll be looking at the Dow Jones, the SPX, the VIX, TNA, UUP, and FXE. And today was pretty unremarkable. I thought it felt weird all day long. Totally not impressed with the action. They had that IPO for that linked stock that did absolutely crazy. But beyond that, we had bad news, no real reaction. It's just kind of all over the place, and I didn't care for it all. Unlike yesterday, where it was just a nice day. It was a trending day, and today was not one of those. As you can see on the Dow, we have a spinning top. And I've said it a few times, I hate spinning tops. This is my least favorite candle. I mean, I just can't stand these things. So, there's a lot of people online saying, oh, this is going to drop, oh, this is going to go up. And, that indecision is reflected in this candle. Me personally, it could go up, it could go down. I am not going to trust it until we have separation of the short-term moving averages. So if it wants to chop away and do all kinds of craziness, it's not going to have that requirement. So, I might scalp during the day, which is what I've been doing for the most part. But I definitely, there is no trend here. So until there is, I'm not going to get, massively heavy. And there isn't anything really to see during the day. We're just chopping around. It did go up 45 points. That's pretty weak. And the dollar went down, fueling that. We will look at that in a couple minutes. The S&P. Now this candle I like better. It's still not a great candle. We still don't have, separation in either direction, but we do have a hammer. So, at least that gives us indication that, there might be a pullback of some type tomorrow, possibly. But we don't have solid confirmation yet. But I do like that candle a lot better. There is a bullish bias on the daily, just like the Dow. And just like the Dow, it was, it's just chopping all over the place. I don't particularly care for that. Now here we have the VIX, and we've talked about the VIX hanging out and doing damage possibly, and it jumped out of the bar today, so much for further damage. But we do have a inverse hammer, so at least we have something potentially to speculate with. So possibly we could have a bump up tomorrow. It is a weak signal, but at least it's not a stinking spinning top, which I absolutely hate. And beyond that, we don't have any real predictive stuff. The 60-minute, we don't have an uptick yet or anything like that. So, and the secondaries are mixed all over the place. TNA had a rather decent day. It did end with a hammer, or a hanging man, depending on what you want to call it. And so, that would suggest possibly we could have a downtick tomorrow, which would be more chop. All this thing is doing is chopping around on all the indexes. It's not very fun. And it did today meet its price target for having an uptick. So that right here is fixed. So now we're going to go and look at the culprit of today's action, which was UUP, the dollar. Big red candle fueling the whole market, bad news and all, to go up. And the secondaries do look like they are rolling over, suggesting that it would have farther to go, and it's a continuation candle and some of the short-term moving averages are now pointing down. So certainly, and we have the bearish long-term moving average. So certainly, at this point, it does look like potentially it will go down some more, and this does look bubbly. It did meet the corrective target for that bubble, though. So this is all fixed. So, what do I think? I think, yeah, the odds are is that this will go down some more. However, today did have some significant bad news, which probably has not been digested at all. So I would give it definitely a chance of popping up a little bit, and then you have NDEs. NDEs can come in and wreak havoc on a chart, but purely from the chart, this does look like it will go down further, but I'm not going to count it out yet, especially not until we have a crossover of the short-term moving averages and expansion, signaling a potential end to the chop. And FXE, which is the euro, and we do have the bullish long-term moving averages still in effect. We have the secondaries that look like they're ticking up, giving credence to this having a continuation move to the upside. If you counted this as an uptick, which it is, it's not a great one. We are not far away from the corrective target for this bubble. Long-term moving averages have taken some damage, but it doesn't have far to go before this is null and void. So if it does go up, then we would be looking at potentially a flat line if it doesn't continue back up here. It did have a decent run today, solid green candle, so just by the charts, it does look like it'll be going up. But with all this being said, I do not trust the market one way or the other. We've had so much chop. We've had so much just indecision by the market. It has not chosen the direction that it wants to go. So I'm not going to just count on this going back up. I would not be surprised to have more chop, which would mean a down tick, a sideways tick, whatever. But we need more data, and what we really, really need are these stinking short-term moving averages to flatline and have separation going in one direction or the other. So totally neutral on the market as a whole until it figures out what it's going to do with itself, because it certainly does not know right now. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.